Hello and welcome to Macro Mondays, brought to you by David Gockstein. I am your host, Landy, and today is April 13th, 2026, and it's a Monday, although Bitcoin is living in the future as it is the Tuesday session that is open right now. We are going to cover Bitcoin on the higher term time frame of the weekly real quick here. We'll take a look at oil markets. We'll take a look at traditional markets as well, and we might even check in on gold and silver. But we are going to start with Bitcoin because there is the potential for Bitcoin to do a bit of a character change. We did get a completed higher low close on Bitcoin from a technical standpoint, but it did not meet the criteria of closing above some of the areas that I wanted to see last week. But there is the potential for it to do all of that this week. We'll see how likely that is and what that means in terms of a character change. Here, right off the bat, one of the very first things that I wanted to point out here is last cycle. And I wanted to note after the highs came in and we had the big sell-off, where we saw the break of structure come in. All right. And this is something that's going to be pretty important to understand because you're going to get a lot of people, if we do see especially a downtrend break after a higher low swing and close on the weekly, you're going to see a lot of bulls come out of the woodwork talking about how they called it and it's never going to go lower than here. And I'm not saying that that is a foregone conclusion that it will go lower from here, but we do need to pay attention to the setup in the trend and the bands and the type of market environment that Bitcoin is in, because it's still in a bear market. It's still in a bear trend until proven otherwise on higher term timeframes. And it's only just a downtrend or an uptrend break on the monthly time frame as it stands right now. Although I have talked about previously that we could see that macro time frame of a monthly being an uptrend break with a lower low from higher high to lower low, that we could potentially see that become a deviation. I've talked about this since last year. But I wanted to point out that when we got a downtrend break last cycle, here's the weekly. Last weekly higher low there was at 39,600. We saw the highs come in at 69K. We had the big sell-off, a little bit of a consolidation, and then a big move down to break the trend, right? And then, of course, we got a lower high, higher low, higher high. Everyone got very excited after the downtrend break. We saw a clean close above this lower high off of a higher low structure. We saw a lot of excitement. This is it. Told you so. This is just a deviation of trend, and then absolute carnage after that. Now, am I saying that we are going to repeat this pattern exactly? No, but we need to be aware of it. And that is that we have, of course, we had already previously seen the downtrend break, right? So we had the higher low up right by the highs here at that 107 to 108 region, coming in at 107,369 and 69 cents. Nice. But we got the higher highs. We did not get a close above the 124.5 high here. We saw a move right back to the higher low structure, tried to hold as support, deviated with a swing lower low, and then this structure, this consolidation turned into a lower high on a swing and a close down into lower low structure. Of course, we saw a bit of a higher low printed here. It did close the higher low. It swung the lower high swing of the range. There was no real, this was just a low side structure that was being formed to a lower high. But in this case, the lower high got rejected right at the higher low over here at $98,000. And then we saw the next leg down. So while I think that there are some similarities to be aware of if we do see a break of structure, especially a close above $76,000, which is the last closing lower high on the weekly, that turned into that 3-candle structure, became a lower high that formed a higher low with last week's closure. Although we didn't close above the $72,000 region, which is what I would have liked to have seen for a more powerful move up towards the basis, which is just mean reversion. And that's something that I really want to talk about here, is that even if we do see a nice push to set a higher low on a closing basis, and we see closes above $72,000, and we even see a downtrend break. That would be a change of character for Bitcoin, or a change of structure here on the weekly into two parts of an uptrend. So higher low, higher high, right? And that is, of course, still contingent now that we have a higher low in place from a technical standpoint. Although it didn't meet the criteria that I wanted to see for last week, it could meet it this week, closing above $72,000. That still remains to be seen, obviously. It's very early in the week. But if we do see a close above 76, especially, it's going to get a lot of people excited. But again, that would, even if it rallies further, that would be a rally into overhead resistances, over here, and then this entire structure over here. And then there's the highs to contend with over here from a close to a swing at 86 to 89, so on and so forth, which is also, 89 is essentially this higher low and this lower high, which is an inflection point up there by the upper first standard deviation. So the setup is not ready for a bull market turn, is what I'm trying to say. This will take some time, even if it does rally aggressively. And realistically, where would the picture really start to change? The picture would really start to change if we saw Bitcoin get substantial distance from a higher low on a trend break, and not just get through, the lower high, the lower lows here, but start to reclaim the higher lows over here and the higher low over here and the lower high over here at $98,000, right by the upper second, which would be a brutal rejection, even if it started to close above there in the low $100,000 region, even if it rallied to, 110 to 115 by the upper third or something like that. That would be great. And it would be really nice to see. And it would change a lot of the analysis from many online. But it would still have to come back down and form the rest of the trend and really start rolling to the upside. And I would want to see a substantial rally, a compression, then a substantial rally to break back to the highs and above, and then hold those as support. But it is nice to enjoy some green weeks, and we've had two closing and then a day closing of green candles for the weekly. And this is where things really do start to get interesting. Let's go ahead and turn on the local support and resistance areas of interest. And you can see that Bitcoin, did hold the 70,500. In fact, on the daily, I mentioned this on Friday, is this would be the strong area to hold. And that's the daily zone of this tighter range off of the initial move down. And then the lower high that formed up here off of the move down off the candle off 60K. And then the close at 70,000, 70,500, depending on your chart here. But realistically, this is the area that we want to see. Nice close above 74. That opens up the opportunity for the bulls to push further towards $76,000. Again, we would want to see weekly closes above here. And then that opens up, of course, really any daily closes above 76. The area between 76 and 78 is fair game. And then it's really two grand at a time. And then it's 78 to 80 and then mid to low 80s from there. Above 80 to 80,500 here, I'd be looking to 82.5 to 83. And then above there, I'd be looking up to 86 to essentially $89,000, which is the weekly lower high over here and that higher low swing right there. So that would be another key inflection point if we saw any closes above 80. Now, this is expansion into resistance of a deviation, right? So we had the tighter range here that was formed. We had the lower low. We had a higher low swing and close that formed right here, took out the lower high, deviated the range, came back down, higher low again to higher high at 76. And then it was, potential higher low to lower high, lower low. Then we had another lower high, higher low, and a higher high, and now another higher low. So this is a rally into the deviation, 74 to 76. Need to see closes above there. Swings above are great. get between that 76 and 78, but we want to see closes above there. If it hasn't tested 78, I would look for that 78 to possibly 80 test. And in this case, now the criteria is very, very clear on the daily. Any closes below 70,000, 70,500 area, look right to around 68 to 69K. If that is lost, I think we very quickly head to right around the 66,000, 66,000 and a half by the lower first, and that opens up 65K as a target. Anywhere around 65K begins to open up the lows here between 65 and 62 and a half. You can see the lower second hanging out in there right now. And as we get expansion of the Bollinger Band set here, which of course is a modification of the traditional Bollinger Band set, being a triple set here with 3 standard deviations to the upside and 3 to the downside. Basis is still the 20 simple. You know, I would be looking for volatility to increase, BBWP continuing to increase as, you know, Bitcoin is further away from the basis band here. But if we did see it start to break trend and come back down towards the low side of the range, be aware that this would be, you know, an area of interest between 65 and 62 and a half, especially on closes below 68 that start testing around the top side of this range down here. And then anywhere below there would be expansion into the lows, 58 to 60, so on and so forth, mid 50s, essentially 54 to 56, and then down to 52 and a half being a major weekly level. And then it's pretty much 48 to 50 from there. But upside, while we still have structure intact here above 70,000 to 70,500, fair game. And of course, even if it does drop, 68 to 69K is kind of where you'd want to see price settle in on a closing basis, or closing above around 69, and especially the basis band here at 69 and a half. That would look pretty good. To at least rally up further to test the overhead resistances. Again, you know, for the weekly here, the weeklies were hanging out and consolidating between 86 and 89 on a closing basis by that upper first standard deviation. So just be very, very keenly aware of that area up there if we do see a substantial, nice rally above the primary now resistance, because we have seen that we've been testing 74, which again on the monthly 74, recall, is 74.4 specifically is the last monthly higher low, and we did see a test into it. If it can reclaim that 74 to 74.4, 74 and a half region, break out the top side at 76, then I would be looking for this area between, which is weeklies, between that 78 to 80. So essentially the swing low here is what is being tested right now, right at that 74 and a half region. And then it's about the close at 70, at that 78, and then 80,000, 80,500, which is actually this area over here that was tested. And we can even bring this over to that close open lower low in this case. So let's go ahead and move this over, grab this, and you can see it a little bit more clearly. So it's, you know, even a little bit above 80,500. So just be aware of that area as we kind of refine it. Now basis band on the weekly is below there, sitting at 77, 600. So deviation above to hit 78 is fair game if it does work its way above 76 to test that basis band. You can see the upper second standard deviation on the weekly right there at $98,000 or so. So yeah, there's the criteria. Pretty darn clear picture on Bitcoin for the daily. 70,500 for spot. You can take it 70 to 70,500 depending on if you're looking at spot and if it has a premium over perps or not. But that's the area that you want to see for immediate continuation. You want to see continued closes above 74 in the lower term timeframes, or tests of 70 to 72 that result in a break back above 74 and then eventually above 76 if you are bullish, to go and test that 78 to possibly 80K, at least initially. Let's go ahead and take a look at oil, because that is on the top of everyone's minds and everyone's buying into the fog of war. And quite frankly, you really shouldn't be buying into the fog of war, because you have nations that are battling over the narrative, and a lot of the messaging that's coming out is not necessarily intended for you, or even the markets in that case. The reality is money moves well before you hear about anything in the news. And over the weekend, we saw a little bit of a rally into resistance right into the pocket that we had talked about last week for WTI crude here. And that is between the essentially 105 and 107 by the upper first standard deviation. This is set up in a range. If we did see moves above, 107, essentially, I would be looking up to 110 to 112 by the upper second. Anywhere above there, expansion into overhead resistance to test this higher high up here, and potentially the even higher high from prior around the 115 to 120, and then potentially a breakout towards 130. There is a little bit, or was a little bit of a premium for WTI crude. There's a ton of exports coming out of the Gulf of America right now. A lot of tankers, I'm sure you've all heard about it, coming into the Gulf of America to fill up on oil and liquefied natural gas. There's also, Saudi Arabia back to pumping 7 million barrels per day to the Red Sea. And expanding the capacity to actually deliver that to ships up from 5 to 7 million barrels per day is what we're starting to hear. But there's the blockade narrative, people painting it as a complete blockade when it's actually proven to be a blockade of, Iranian oil and Iranian regime sanctioned ships. So there was obviously, I believe earlier today, just a little bit shaky on verification of reports, but China trying to get a ship through and was turned around. And then there's been verification that allies of the United States that are refusing to deal with the Iranian regime are being allowed through. But it's still not nearly at the levels that it was when it was open. And a lot of that has more to do with insurance than naval blockades or the Iranian regime. And that's just the way that things work in the world of shipping, is even if there is the supposed threat of even mines, and then you have the geopolitical tensions that raises rates, they drop anchor, they don't move, right? So regardless of what the truth is, the insurance is what's going to be governing that. And until there is a resolution to that conflict, I do believe that no matter what the rhetoric is, United States letting, ships through, Iran doing a deal and letting ships through, and, no blockades on either sides, no tolls, no nothing, really doesn't matter. It's all about, is that area, is the conflict primarily settled? And then is there still mines there? Or is there not mines there? Because Iran says they dropped mines, but they don't know where they are. And then there's been no independent verification of mines. And the U.S. has said there is mines, but there isn't mines. They're sending mine sweepers, and then they sail straight through. And it's like, okay, well, this is called fog of war. And it's as much for the nations at war with each other and the surrounding nations that are involved in diplomatic or geopolitical positioning, as it is newsworthy. And reality is that the chart has got the truth in it. Big rejection at that 105 to 107 region, traded back below the big daily region at 98 to 102.5 for WTI, and headed down towards that 90 to 95 support. Now, if 90 to 95 is dropped, look directly to 84 to 86 down here by the lower second. Anywhere below there is expansion into the next low side structure. A swing is fine. It would probably pick up and try to recover 90 to 95. But if it does start to close below around 84 to 86, expect to see, upper 70s to mid 70s pretty quickly thereafter. And again, for the other side of that is if we do see it trade and close above, especially 112, we've either already seen 115 to 120 hit, or we will see it shortly thereafter, at least tested. So the same can really be said for the relevant areas when it comes to Brent as well. And when looking at oil, why have I been stressing oil so much? Well, because I want you to pay attention to Dixie, which was giving us some leading indicators last week, and I made sure to point this out. It was already in a downtrend, meaning it put in the trend reversal lower high. and it put in a lower low. We had not seen the follow through with oil just yet, but we did see the rejection. So let's see if this either finds a floor around here, which would probably mean that oil finds a floor somewhere above that zone or around that zone of 90 to 95 where it currently is trading. And then we see this try to make a rally back towards the mean or the overhead resistance towards the 99 to 99.60 region. If that was reclaimed, then we have to pay attention to the lower high in Dixie, which likely means that oil's heading up. It most certainly means that oil's heading up in that case, in my assessment. And we would have to pay attention to a possible close that would break the downtrend here at 128 cents, possibly going for the top side here at 140, and then additionally 164 to 65, and then working its way towards 101 to 102. Now, I'm not totally confident in that actually occurring, but watch the charts. The charts will tell you way more than what you're going to figure out from the news, because the news is, the news is purposely deceptive and has an agenda. And then so do the nation state participants, each and every one of them, whether you're in the United States, in Europe, in Asia, in the Middle East. Every single player in this game has a vested interest in pumping out a specific narrative, but the money tells the truth. So pay attention to where the money's going. And if you are interested, I don't talk about it much here. I get into deeper conversations on Spaces events, typically about bonds. But pay attention to the bond market, which we did see a little bit of a bid on in the Monday session. Now, let's go take a look at even traditional markets. So we did see, a move back down in the early session, and then a move right back up to form this nice high, that is now with the close right at 48.2. I need to see 48.4 to 48.5 for some expansion further up, testing in and around, 48.8 to 49K for Dow. And realistically, if we see this area where the low is put in right around the upper first, I would expect to see lower 47s if it does head down. 47.1 to 47K is fair game, and then it's right to the mid 46s to upper 46s around the basis band. If that's dropped right back into the weekly, this is a trend break, and you'd want to see the weekly hold up around the 46 to 46 250 or so here on the top side of this weekly structure, and then just pay attention to continuation above 48.5 in towards 48.8 to 49K. That would look pretty good. Even a swing towards 49.2 to 49 5 to 6 up here by this line, if it really did rally on some good news, as I do think that it would be pretty reactive to obviously what oil and Dixie are doing, and then be juiced by the news later from retail. Now, this is a little bit of a different look when looking at NASDAQ, which had a very good day, and went right to our overhead resistance line and essentially closed right on it above 25K. That's what we wanted to see. We wanted to see a reclaim of not just the lows, but the highs of this consolidation structure before the breakdown to major support. And we've got 29,382. And, this is 29,383, essentially closing above this high. That does give, 25.5 a fair shake, even into the 25.8 to 26K up here. I don't know if we'd necessarily see the highs in play right away. We do have to wait to see if we get that. We could absolutely see a face melting rally to the top side of the highs here for NASDAQ, which is a brilliant recovery, a nice V-shaped recovery. But what goes up must come down. I would look for things to head back down at some point, especially if we see any closes below 25K. 25K, sorry. 25K to 24.8. I've been traveling a lot, so I really hope I didn't get sick, but we'll see as the day is gone on. I feel like after I've now settled down back at home, I feel like I might be getting a tinge of something. So Hopefully not. But, 20 anywhere below 25.8, we look right to 24 and a half. I'm sorry, 24.8. Looked at 24 and a half, and then down to 24 to 24.2 by the basis and into the weekly there. Anywhere above here, like I said, 25 and a half is fair game, even in early session or overnight trading. And then potentially even more up to 25.8 to 26K is in the cards. From a technical standpoint, as long as we see 24.8 holding up. And then SPY. SPY is not going to load. There we go. SPY broke into a key area and is back in the high side structure here by the upper second, 685, 686 region. Above 690, 692 to 695 by the highs is fair game. potentially even continuation to 700 points. It'd be wild, right? But we could absolutely see that, especially if oil continues to fall and Dixie continues to fall. We'll see more risk being put on the table. I said this Monday of last week that risk was being tested, and the market was just waiting for the opportunity to actually follow through with that trade. We are now, we saw the big gaps up. We saw them following through, and it's still got some juice left to it, but back below 675. Pay very close attention to 670 to 672 by the upper first. So if we see 675 break down, 670 is 672, and then right to 668 to 670 essentially. Anywhere below there, we're looking down to 662 to 665, and then potentially the upper 650s around that 657 to 660 into the weekly zone needs to hold 650 to 655. Other than that, until this rally subsides, we could potentially see the 690, 688, 690 region. If that really does start to break in earnest back towards the highs around, 692 or so, 695 is not far, and then that opens up, all the way up to 700 points. And I really do think, I think that you just got to watch. In this case, if you are in traditional markets, you got to watch futures into market open to see if we get follow through to either the upside or downside. There is some economic news that may be relevant. This is going to sear your eyes, so I'm going to prepare you. It's a fully white screen for Forex Factory and the calendar here, but we've got core PPI coming in. And I actually wanted to address this. I didn't address this last week, but I do want to address this. So we had a lot of fears of inflation last week and the miss on GDP. And one of the things that I mentioned, and I don't remember if I mentioned it here or on David's show, The Breakdown, which episode 700 pending, the core PCE is the inflation metric stayed steady. Final GDP came in under by 0.2%. And PCE is really what you got to pay attention to. That's what the Fed pays attention to. And then core CPI. Core CPI came down 0.1%. CPI came down 0.1%. CPI year over year came down under projected. Now, still substantially more in terms of what the projected was at 2.4. So 2.4 to 3.3 is a big jump. From 0.3% previous read to 0.9% when 1% was expected. So you can see that the shorter term expectations were higher and it came in under. And, moving from 0.7% final GDP to 0.5%, these are all things that are being painted as very negative, but PCE didn't move off projected, didn't move from previous. And if you look at core CPI, 0.2%, projected 0.3%, but it came in at 0.2%. So a lot of ado about nothing, a lot of fears of fears. But really what the Fed is measuring is taking out the shorter term. And with this particular administration, the shorter term volatility has to be stripped out, and that's what they got to go on. So understand that as we move into some of what we're going to see coming in towards the end of the month, we're going to get some PPI reads. So that's producer price index. We're going to get some unemployment rate and change this week for Australia, not the United States. So disregard, but pretty important for Australia here. Not much happening this week outside of PPI. But next week, we will have a little bit more with retail sales coming in. There was a lot made of weaker demand in retail. A lot of that is there's a lot of credit bloat. And then really not a lot else, right? Before getting to the final week of the month, when we will have federal funds rates in the last week of the month. So understand that we'll have expirations on the Friday before, and then we will have the meeting after expiration. So when options are rolling, there might be a little bit of volatility towards the end of the month, even before the FOMC meeting, and then some real decisions and positioning based on what is said there on the outlook. So something to be aware of. We don't have too much in the way of economic data outside of, I would pay attention to PPI, producer price index, and see how much that may move in the near term. So month over month projected at 1.1%. Core is at 0.4%, which is actually down from the previous projections, where PPI month over month is up in terms of projections. So hits or misses here might define the top of the rally. All right. Either a hit or a miss tomorrow. So just pay close attention to it. And that's pretty much all I got for you today. I know a little bit of a longer one, had a lot to cover today. And I hope that you had a wonderful weekend. I hope that you have a wonderful week ahead. I hope that you join in the chat for the breakdown, all week this week. Obviously, that is at 12 p.m. Eastern, 9 a.m. Pacific. I'll be on there typically around 12:15 p.m. Eastern, 9:15 Pacific with David to talk markets, to talk some politics stuff, which I don't typically touch on here, and kind of give a breakdown on the breakdown of what I'm seeing in the markets if I do see something of critical importance early in the day. And then, of course, I'll see you back here on Wednesday for the Wednesday check-in, and then Friday again for the Friday recap. Thank you so much for liking and sharing this out there. I really do appreciate you all. And I look forward to talking to you again tomorrow and then on Wednesday in recorded format. With all of that being said, Landy out. Have a good one.